Dividends are great. However, most dividend stocks pay anywhere between 3 to 5%. What if I told you that there are funds that you can earn a higher yield with? This can be done specifically with premium income ETFs provided by JP Chase. They offer two choices. One is ticker symbol JEPI and the other is JEPQ. It's important to know the difference between the two and decide which one is better for your portfolio. Stick around because in this video, we will go over key differences, what to expect in terms of performance, and which one I chose to go with and why. Now, before we get started, be sure to hit that like button and subscribe. It's your favorite investor, and this is a channel to help keep you invested and build your wealth. These premium income ETFs provided by JP Chase are excellent alternative for investments for investors that seek income. However, these funds can not only provide income, but they should do a pretty good job at appreciating capital, as these ETFs actually hold companies and allow them to have the upside that comes with its holdings. This is a huge difference from other income ETFs that sell covered calls on 100% of the portfolio. This key difference allows the ETF to grow. Covered calls cap the upside, which is how most income funds provide such a high yield. This does not happen with JEPI or JEPQ. So let's start with JEPI. A fairly young income ETF started in May of 2020. This ETF seeks to track the S&P 500, and it does this with its 135 holdings in companies like Amazon, MasterCard, Adobe, Microsoft, and Intuit, to name a few. The way that it is able to pay such a high dividend yield is by selling covered calls on the S&P 500 and not on its individual stock holdings. This is key to remember. At the time of this fund, they pay out a 10% dividend yield with an annual payout of $5.35. They pay a monthly dividend and have done so since inception. Over the last year, this fund has seen capital appreciation of 3.28%, and this year has pretty much hovered around negative 1.6%. Not terrible considering dividends have been paid out. However, in a year where the S&P 500 has appreciated so much, this fund was not really able to see any of that return there. It is tough to say how this fund will perform in the future. I mentioned one of the risk in covered calls ETFs are the fact that they are capped to the upside. Although somewhat true with JEPI, I believe this fund can perform as a store of value and consistent dividend payments, but I wouldn't expect some outsized returns. Moving on to JEPQ, I'm going to give a brief summary of the fund. If you want to see an in-depth analysis, I encourage you to check out my other video where I talk about the fund in detail and give some better insight into how I can see the future of this ETF. JEPQ was started in May 3 of 2022 and seeks to track the investments in the NASDAQ 100. Holding companies such as Apple, Microsoft, Nvidia, Meta, Google, and Amazon, to name a few. They pay a monthly dividend of 11.79%, or about $5.53 in its annual payout. Year to date, this fund has grown 15.39%, quite the sharp contrast to JEPI. The reason this fund has moved so much compared to its counterpart is because of its holdings. The dividend distributions are equal. However, since the underlyings of the ETF has grown exponentially this year, so has the fund. Now, in my opinion, I believe JEPQ is the better of the two options, and this is the one I chose to add to the portfolio. I wanted more exposure to tech, and since JEPQ holds some great tech companies, I felt this was a perfect fit. The volatility in the tech sector will cause the price to fluctuate a lot, but I believe that writing covered calls on the NASDAQ, especially during times of volatility, should be able to provide some nice income. Really, I don't think you can go wrong with either. I just feel that I would rather go with an income fund that holds tech companies. Anyways, if you made it this far in the video, I hope you got some value from it. And be sure to check out thebestdividendcalculator.com to start putting together your plan to build wealth. As always, thank you for watching, and be sure to hit that like button and subscribe for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.